People like to buy with non-recourse in real estate. And one time I asked Charlie, there was some real estate guy we were talking to him, and how do they decide how much a building like this is worth? The answer is it's whatever they can borrow without signing their name. And if you look at real estate generally, you'll understand what the phenomena that's happening if you remind yourself that that's the attitude of most people that have become big in the real estate business.
The market is shaking, red numbers flood the screen, headlines scream panic, and investors everywhere are asking the same question. Is this the beginning of a crash or the biggest opportunity of the decade? In times like these, when fear takes over and volatility is the new normal, only the strongest companies survive. And today, we're breaking down two titans that not only survive in chaos, but thrive in it. Amazon, the king of innovation, e-commerce, and AI-driven growth. Berkshire Hathaway, the fortress of financial stability and long-term wealth. And if you're wondering where to put your money right now, if you're looking for clarity in the chaos and confidence in your investments, this video is exactly what you need. Let's dive in and show you why these two stocks might be your best shot at building wealth even when the markets are burning. Let's kick things off with Amazon, ticker symbol AMSZ. With a jaw-dropping market cap of $2.490 trillion, Amazon is much more than just an online retailer. It's a global empire reshaping how we shop, work, and consume. What started as a small online bookstore has morphed into the one e-commerce giant, a leader in cloud computing with AWS, and an innovator in artificial intelligence and logistics. Amazon's Prime membership is a game changer. With over 200 million members worldwide, Prime generates predictable recurring revenue, creating a customer base that keeps coming back. These members drive higher average spending, which strengthens Amazon's ecosystem and its grip on global retail. But it doesn't stop there. Amazon is still expanding into massive new markets. In 2024, Amazon achieved its fastest delivery speeds ever, thanks to continued investments in logistics and same-day delivery. This gives Amazon a massive edge over competitors, making it almost impossible for rivals to match its reach and efficiency. Amazon's AWS cloud division is another hidden gem. While it represents only 17% of total revenue, it generates the majority of Amazon's operating profits. The demand for cloud services is growing fast, with the rise of artificial intelligence and machine learning driving the need for scalable, flexible solutions. Amazon has been heavily investing in AI to help businesses improve efficiency and growth. So not only is Amazon dominating e-commerce, but it's also the go-to company for businesses wanting to scale up using cloud and AI technology. Now let's talk numbers. Amazon is expected to see 11% revenue growth in 2025 alone, and if its profit margins continue to improve, investors could see 22% annualized earnings growth over the next several years. That means substantial returns for investors looking for growth over the next 5 to 10 years. Amazon is far from reaching its peak. The best is yet to come. Now let's turn to the other powerhouse, Berkshire Hathaway. Led by the legendary Warren Buffett, this $1 trillion conglomerate is the epitome of stability and smart investing. When Buffett took over in the 1960s, Berkshire Hathaway was a struggling textile company. Today, it's a diversified investment and holding company with ownership stakes in hundreds of businesses across industries, including insurance, energy, railroads, retail, and more. But it's not just about what Berkshire owns, it's about how it generates wealth. Buffett has built Berkshire Hathaway into a financial fortress. Back in 1964, the company had just $920,000 in cash. Fast forward to today, and it holds an astounding $320 billion in cash and U.S. Treasury bills. This gives Berkshire the flexibility to seize opportunities whenever they arise, especially during economic downturns, when most companies are too strapped for cash to make a move. While other companies struggle during recessions, Berkshire thrives, using its capital to buy low and build wealth. In 2023, Berkshire Hathaway generated $37 billion in operating earnings from its diverse businesses. This shows how effective Buffett's strategy is at generating steady, predictable cash flow. Not to mention, Berkshire also holds huge stakes in blue-chip companies like Apple, Coca-Cola, and American Express, investments that contribute billions to its portfolio. As of Q3 2024, Berkshire's stake in these three companies alone was worth $139 billion, part of a $271 billion equity portfolio. What's more, despite Buffett being 94 years old, there's no reason to worry about the company's future. Buffett has already named his successor, Greg Abel, to take over as CEO. Buffett has full confidence that Abel will continue the company's legacy of smart investments and strategic growth. This ensures that Berkshire Hathaway's strong leadership will remain intact for years to come, no matter what. So what makes these two companies so unique, and which one should you consider for your portfolio? Amazon is your go-to for aggressive growth, innovation, and dominance in cloud computing and e-commerce. It's positioning itself to take an even larger slice of the global market over the next several years. If you're looking for high-risk, high-reward growth, Amazon's the play. On the other hand, Berkshire Hathaway is the epitome of stability and long-term wealth building. With its diversified portfolio of world-class businesses and billions in cash reserves, Berkshire offers consistent returns without the volatility of tech stocks. If you're looking for steady, dependable growth, Berkshire should be your choice. And if you enjoyed this breakdown and want more insights into the stock market, don't forget to like, subscribe, and turn on the bell notification for more in-depth analyses. This content is for informational purposes only. Always do your own research before making any investment decisions. Thanks for watching, and I'll see you in the next video. Stay smart, stay invested.